60% of annual return. This was my profitability for the last 30 days. I'm full-time institutional crypto trader and part-time YouTuber. And in this video I will show you all the trades and uncover my strategy, so you can just copy it. Let's go! Everyone who subscribed to my channel and joined my Discord already know which kind of strategies I use for my public portfolio and follow my trades on Discord. If you still haven't joined my Discord, the link you will find in the description below. To generate 60% of annual return in the first 30 days, I used two simple strategies. The first one was a cash and carry trade. With this strategy, I was able to earn fixed return no matter what. So it means for me it doesn't matter where the market will go. At the end of the period I will receive my fixed profit. And the second strategy which I used was selling options. And this is my strategy for a floating profit. So it means the profit can vary from day to day and depends on my decisions. And if I would like to take more risk, my reward will be higher. So as a result, I have a fixed rate which I receive no matter what, and the second strategy is selling options. And with this strategy I can decide how many risks I would like to take. More risk I take, more profit I will receive. And now let's take a closer look at each profit stream and calculate how many profit I receive from each stream. To make profit with options, I was selling put options almost all the time. And I was selling put options for Ethereum, and also at the end of February I was selling put options for SOLANA. And let's start with SOLANA options. At the end of February, as you can see, SOLANA dropped to the very important support level. As a result, selling options in this current level was very profitable. And let's take a look at the trades which I did. Here you can see the P&L analysis for my SOLANA trades. And I go straight forward to all the trades which I did. As you can see, there are 7 trades which I executed, and all the strike prices that I sold were really close to the support level of $120. And I used very low delta to have a very high probability of success. As a result, within 7 days I was able to collect the premium of $18, which is more than $2 per day, with very high probability of success. And if I divide all the premium that I receive, so $18, with a strike price of $124 multiplied with 10 Solanas, I get a profitability of 1.4% per week. This is more than 75% of annualized return. So seems peanuts at the first glance, but it's not. And by growing my account, I will be able to sell more contracts without a significant risk. And as a result, collect more premiums in USD value. But this will be a little bit later. Now let's take a look at the main income stream that I had. And this was Ethereum options. And here you can see all the trades which I executed with Ethereum options. Here you can see the price at which I sold the option, and here you can see the price at which I bought the option to close the position. Sometimes I closed the position a bit earlier and didn't wait until the expiration date. Sometimes I waited until the expiration date and then the value of the option was equal to 0. And as a result, I collected the full amount of the premium. And here you can see all the trades that I did in February. To keep it simple, I exported all the trades into Google Sheets so that I can simply sum up all the premiums and get the total result. And the total premium that I received in the last 30 days is equal to 0.056 Ethereum in the last 30 days. So this is a more than 5% from one single Ethereum. And my strategy was selling options every day and receive a small premium, sum up into one quite big for my portfolio result. And I begin with the first strategy, which has a fixed return. And this strategy called cash and carry trade or basis trade. The strategy is very simple. I buy Ethereum at the spot market and sell future contract with a fixed expiration date. In my example, I bought Ethereum at the spot market and after that I sold a future with expiration at the end of June. The profitability at that time was equal to 7.8% or $84 in a dollar value. And to be honest, this was the right decision because the price of Ethereum at that time was equal to $2,800 in the beginning of February. As you can see, after that there was a huge volatility in the market and price of Ethereum dropped to $2,200. If I would simply buy Ethereum at that time, now I could have a loss of hundreds of dollars. And in the first video where I showed step-by-step guide how to execute this trade and receive the profit, I explained that for me it's important to have a stable USD value of my account balance and consistently receive my passive income from the option selling. And a bit later I will show you a huge return which I was able to earn with the options. But now let's come back to the cash and carry trade. Here you can see the option which I sold, which has a maturity at the end of June. And you can see that I have a profit on this position, which is equal to $442. And the most of this profit is the compensation of the value loss on my spot position in Ethereum. So it means as I bought Ethereum at the price of $2,800, I hedge it with a future, and as the spot position lost its value as the price of Ethereum dropped, the Ethereum future compensated those losses. And as a result, I have my stable USD value on my account balance and also at the same time I earned profit. And let's take a look how much exactly profit did I earn. So let's open this contract to take a look at the premium. The annual return for this trade right now is equal to 6.3%. 30 days ago, the profitability was equal to 7.8%. This was equal to $84 in a dollar value. Right now, the premium is equal to $43. So that means in the last 30 days, I was able to earn a bit less than $40. A bit less than $40 because my position was a bit less than 1 Ethereum. I earned this dollar premium at the higher pace because the annualized return dropped from 7% to 6%. As a result, the spread between future contract and the spot market became tighter. And as a result, I could receive the profit at a faster pace. And that's really good for me. But you may ask me why the spread became tighter. What's the reason behind it? The reason is very simple. If you take a look at the graph, you can see that the price of Ethereum dropped massively. And all the time when the price drops, the spread between future and spot market tightened. When the price started to rise, and rises especially at a very high pace, the spread between spot market and the future market became more wider. So that means because the price of Ethereum dropped massively in the last days, I profit from this drop. And because my current contract expires at the end of June and there is still a plenty time until the expiry date, I would like already to take a profit and open the same strategy with a short-term maturity. Because if the price of Ethereum will rise in the next month, the spread could go wider again. And as a result, the dollar premium will increase too. So that's why I would like already realize the profit. And to realize the profit, I just need simply close the position. And after that, I will sell future with a short-term maturity to still have a hedge, in case the Ethereum price will drop even to lower prices. To choose between different expiration dates of the future contracts, I can go to the metric futures page. And here I can find all the annualized returns that I can get. If I sell a contract with expiration date at the end of March, I will be able to profit 7.2% of annual return from this trade. If you would like to understand exactly how this strategy works, you can go and watch my video in which I explain exactly step by step how this strategy works and how to get this profit. So I will trade the future with expiration at the end of March, because there is still 22 days until the expiration and the profitability of this contract is still high. And in the case the profitability for the June contract will increase in the future, I can simply close the March contract and sell June contract one more time. So now let's execute this trade. First of all, I have to close the June contract. And I go to the June contract, and here we go. I have right now a position of $2,058 value. This is equivalent of 0.9187 Ethereum. So I will simply close this position and will open the same position with the same Ethereum amount in March contract. Okay, so this is equal to 0.92 Ethereum. So let's close it first of all. So I will double check the amount that I would like to close. It is equal to my position that I have open. After that, I will adjust the price at which I would like to close the position and click on the buy button and close. Done. Now I go to the future contract which has expiration date at the end of March. I will open it. To open position, I have to enter the amount that I would like to trade. And this is equal to 0.92 Ethereum. Adjust the price at which I would like to sell Ethereum future contract, which will be equal to $2,200. Press the sell button and create order. And wait until the order will be executed. And it's done. So I'm fully hedged again. And let's take a closer look what we have. And now I have a position which will expire at the end of March. As you can remember from this video, I started my portfolio with a balance of $2,002. Right now my balance is equal to $2,112. And this is exactly $110 more. And this is my profit for the last 30 days. And to calculate the total profitability of the trading for the last 30 days, I'm going to adjust the end of period balance in the spreadsheet and insert the value of $2,112. Okay, and as a result, the monthly profitability is equal to 5.5%. And this is a very high profitability in trading because the annualized return is equal to almost 66% of annual return. In the next month, I will keep trading, and after the next 30 days, I will create a new video where I show you the results for the next 30 days. But to grow my account at the more faster pace and also use all the opportunities that the cryptocurrency market has, I will grow my account also non-organic. So it means I will deposit each month a small amount of dollars. In this month, I would like to add $300 to my account. And these $300 I will be able to use for different strategies. For example, the strategy with a small account balance. Exactly how this strategy works, I explain in this video. So see you after 30 days with a new results. Bye.